Naren Balika and Anil Chaudhary, whole-time directors, to this analyst meet. All the participants are requested to note that this meeting has been recorded, and the audio and video recording of this meeting, together with the presentation and the meeting's transcript, would be uploaded on our website and also submitted to the stock exchanges. I would like to brief you on some of the important points for the smooth conduct of this meeting. All of you have been put on mute mode to avoid any disturbance arising from the background noise. For the question and answer session, the names of those who have already registered with us for asking questions will be called first, and thereafter the respective speaker will be unmuted. Others who have any questions may please raise their hand by clicking the raise hand icon on the Microsoft Teams page, and we will bring you in. I request all the speakers to be brief with asking their questions and answers. I request Alex to take us through the presentation on company's performance for the quarter and half year ended 30th September 2025.
Thank you, Manohar, and a warm welcome from my side to all the analysts and fund managers that are able to attend this call. Very happy to have the call. The last time we were together was in May, so certainly a lot has happened since then. We're looking forward to walk you through some of the key updates. Before we do so, like always, just a cautionary note regarding forward-looking statements. We only discuss matters that are in the public domain. We do not provide any forecast about the future business situation, and we do not comment or give guidance on future results or business outlook. We always start with safety, and we recently celebrated, like every year, Global Safety Days in September. And more than 900 colleagues around all of our sites got together, training, creating awareness around safety, since this is really our lifeline, to always have safe operations, people and processes. This is at the core of what we do. And it's also reflected in our results. I'm really proud, and in the name of the whole board of BASF India Limited, a big appreciation for all the teams, all the sites, and the businesses to achieve a zero incidents safety performance, a very strong safety performance. We have had no high severity incidents year to date. We've had no lost time injury and also no process safety incident. And I think this speaks really for the excellent quality and safety awareness mindset that we have in the company. And also our leading indicators continue to be very solid, very healthy, since they're a good sign of protection. When it comes to the macroeconomic update, of course, you see our RBI revised India's GDP growth to 6.8% for financial year 25-26 from earlier 6.5%. The Purchasing Manager Index rose in October to 59, which is good. It's a sign of expected expansion of the economy. Inflation, headline inflation is low. There's also anticipation of a potential easing of interest rates, and the recent GST cuts have certainly also given some cushion to the impact of ongoing pressure. So consumer confidence remains resilient. Nonetheless, geopolitical risks have been amplified with the US tariff actions, and especially China's industrial overcapacity continues to put pressure, specifically also on the chemical industry, which we will talk a bit more about. If you look at different industries on the bottom, I think automotive industry continues to be solid. The monsoon, I think, was in many parts a very long monsoon and very excessive rains, which have impacted sprayings and also crop losses. So that has had, unfortunately, an impact on the ag side, on the ag input side. But lower inflation is certainly boosting consumption when it comes to fast-moving consumer goods, and that is something that will continue to be visible moving forward. Infrastructure investments remain robust. So overall, I think India is having a solid economic activity. Nonetheless, geopolitical risks and also the overcapacities in China continue to put pressure. And with that, I hand over to Naren to walk us through the financials for the last quarter and the first half of the fiscal year.
Thanks, Alex. So good afternoon, everyone. So let us review the financial performance, and this is on a consolidated basis, which means I'm adding BASF India Limited and BASF India Coatings Private Limited, so the 100% subsidiary of BIL. So both put together, you see the numbers here. Starting with the segment revenue, there's a small change in the total overall segments. The catalyst business, which was part of Surface Technologies earlier, has now been moved to Industrial Solutions segment, and it is clubbed under Performance Chemicals. So it is the process catalyst, which was in BIL all the time, and now it is shifted from Surface Technology to Industrial Solutions. That's the only change in the segments. And this is not to be confused with the catalyst business of emission catalyst, which is in Chennai. Yeah, that's a separate company, not linked to BIL. I'm talking about process catalyst. Coming to the pie chart, the material segment has been the biggest, 27% of the total sales, and followed by nutrition and care. We see the results later. It's the star in the game now, nutrition and care. And then industrial solutions, and fourth is agriculture solution at 17%. So that's how it's spread, very well spread portfolio, and which balances each other in a business cycle. Total sales, as you would have seen, for 6 months is 7,900 crores. Coming to the quarterly performance, yeah, the left side is the sales, and on the right side is profit before tax, before exceptional items. Sales is down by 5%, by 5%, mainly due to higher volumes, but lower price realization. Yeah, volumes are high by 2%, whereas prices are down by around 7%. So net of that is 5% lower of sales in the current 6 months, current 3 months, a quarter. Coming to PBT before exceptional items, 16% down, impacted mainly due to higher input costs, that is raw material cost and other input costs, and also the product mix. Yeah, product mix, as you know, changes over a period, and this time the product mix was not favorable for us, change in the product mix, and that has also resulted in the numbers going down. Coming to half year, this is April to September numbers, 4% lower in sales and 27% down in PBT. The good thing about the whole development is stable volumes. Yeah, for the 6 months, the volumes have been stable, and we have been able to match the last 6 months' performance. So that's really a good achievement of the business units. But the price realization is lower, around 4% reduction in prices, and that's across the board on an average. Yeah, so 4% reduction, and that has resulted in net 4% reduction in sales. PBT is impacted again due to higher input cost and product mix. So in the first quarter, we had that issue of higher input cost and product mix. And then in the second quarter also it followed. So you can see it both for quarter and half year, the impact is the same, yeah? Higher input cost and product mix. Coming to quarterly performance, the light blue ones are for last financial year, 25, and the dark blue are the current financial year 26. Sequentially, compared to the June quarter, there is a 4% increase in sales in September. But compared to September, like I showed earlier, 4,248 crores becomes 4,000 crores, 5% lower sales. If you take the entire 6 months, the sales is lower by 4%. Coming to PBT, big ups and downs we can see, especially for the last year. Hopefully, we won't have that kind of a movement this year. September compared to last September is 16% down, and sequentially compared to the immediately previous June quarter, it's 23% down. Net for 6 months, it's a 27% reduction in PBT before exceptional items. This is an important chart on net working capital. The light blue is inventory, dark blue is receivables, and the gray at the bottom is accounts payable. So I would like to take you through the September quarter of 2024 compared to September of 25. because that is, since we have some seasonal business included here, both performance materials and agro and others, it's good to compare the same quarter of last year, September to September. Inventory has gone up slightly compared to September last year, whereas receivables has come down from 3,200 crores to 3,000 crores. Whereas the big difference, a big change is in the accounts payable. Yeah, from 4,100 crores, it has come down to 3,350 crores because all the payables were made on time, and hence the 750 crores reduction in accounts payable. So the net working capital is receivables plus inventory minus accounts payable, and hence we see 2,500 crores of net working capital as compared to 1,500 crores of last year. Coming to sales development, the leftmost is 8,200 crores is last year's 6-month sales, and the right side is 7,920 crores current quarters, current 6 months sale. Materials has been impacted significantly, 400 crores down, mainly contributed by downturn in monomers division. Yeah, the volumes are down by almost 1/3 in monomers division, and performance materials is up by 4%, but then the prices of performance materials are also down by -5%. So net, it so happens 400 crores of lower sales, mostly impacted by the monomers volumes. Chemicals top line is down, but as we know, it's a merchandise business, and the top line is not very indicative for some of the commodity business. We have to see at a profitability level what happens to chemicals. But at a sales level, the top line is down by 120 crores. Agriculture solution, Alex already talked about the wet monsoon that we had and untimely rains and delaying the spraying and postponing and cancelling the spraying, which has resulted in a lower net offtake of agriculture solution business by around 80 crores. Star in the whole game is nutrition and care, like I already mentioned. Both volumes and prices have gone up for nutrition and care. Volume up by nearly 8% and prices also up by 4%, which is a rare combination where you have increased volume at a higher price. So nutrition and care has been able to achieve that and has become one of the big contributors to the BASF top line, with 1,700 crores of total sales for 6 months. Surface technology is our coatings business. This is another good story where higher volumes and price from key customers, the OEMs, have been achieved, which is again a difficult task, but the team has been able to manage that and get 280 crores of sales. And this is the consolidated part. The coatings business comes here, which is under BASF India Coatings Private Limited. Industrial solution is stable at 1,400 crores, and net there's a 4% reduction in overall sales. Coming to the PBT before exceptional item, profit before tax, 6 months. Material segment, like I said, 400 crores lower sales has resulted in 85 crores lower profits. So this is as compared to last year. Here, both performance material and monomer has not done well, and that has impacted the bottom line. Agriculture solution for the lower 79 crore lower sales, we had 34 crore of lower profits, yeah, mainly due to the lower net offtake of the products. Surface technology has stabilized slightly lower here for 6 months as compared to 2 crore that we earned last year, but not to be worried about it. Most of that is coming from one-time kind of a cost for setting up the new entity and managing the new legal entity. So in the first quarter, we had some costs there, and that has impacted the 6-month results also. The recent 3 months, if you have noticed, the results are much better. Industrial solution, and nutrition care chemicals all are on the positive side compared to last year. And like I said, nutrition and care from 20 crores has gone up to 30 crores. So that's a good story. Industrial solution is a stable performer for us, both dispersions and performance chemicals, and it's doing well. Coming to the key performance indicators, receivable days slightly higher, 65 days, but then the overall overdues are still 10-11%, 10 to 12% of the receivables, so and still under control, well under control. And we are very confident that this will be brought down a little further by the December quarter. Yeah, the full effort, all efforts are on by the business units to ensure the collection happens on a timely basis. Inventories are slightly higher. We already saw that earlier slide also. This needs to be kind of definitely brought down. There is some buildup of inventory for agro, and needs to be kind of liquidated in the season and going forward. So we are again confident that inventory will be taken care and nothing much to worry there. Cash flow from operations is down by 900 crores. I already explained in the net working capital. Mainly, it's going to increase receivables and significantly lower 750 crores of lower accounts payable. Yeah, so that's the reason why cash flow is from operations is minus 900 crores. Operating expenses, which is all expenses other than the cost of goods sold, yeah, that is higher at 13.2%. Mainly due to some employee costs and severance costs, etc., which is adding to the higher cost. And there are some communication and systems upgrade costs for SAP, which we are upgrading in the coatings business, in our core business and elsewhere. So that cost is also getting charged already in the system. And there are some foreign exchange hedging costs. So that's the net reason why it goes up from 11.5 to 13.2%. EBIT before exceptional item as a percentage is 4.3% for this 6 months compared to 5.6% last year. ROCE is 9.4%, and return on net operating asset, which means excluding all the cash investments and excluding the income received from that cash investment, net on operating assets, it's 10.6%. And these three, the last three are not annualized, yeah, which means it's for 6 months as it is for 9.4%, 10.6%, and EPS before exceptional item is 56.5 rupees. And that's the number in absolute value. With this, I hand over to Alex and look forward to questions later in the Q&A.
Thank you. Thanks, Nadine. Maybe just to complement with a few additional updates. First, after our last analyst conference, right after we launched 2 new crop protection products, an insecticide and a fungicide, Valexio and Mibelia, in the rice crop. And I'm happy to say, and this came right before the season, yeah, so right on time. And I'm happy to say that Valexio, in the meantime, is already one of the top 10 selling ag products in our portfolio, even in the first year of launch, yeah, when it comes to value. Yeah, so these 2 launches are really diversifying our portfolio in the ag division. Which is making it more robust. We, in fact, have 26 products now that have at least 10 crores each of a value contribution. So that really, diversifies our portfolio footprint. And of course, rice and insecticides is a significant market in India. We also showed you the last time the picture on the left, yeah, in Dahej. We are market leader in Celasto. Which is a versatile microcellular polyurethane used in automotive, industrial, railway, and other sectors to cushion and dampen vibration and also reduce noise, yeah, making a smoother, quieter performance. We're market leaders here, and we are currently building a new facility. As you see, the current picture from November on the right, yeah. Second half of 2026, this will be ready to be commissioned. And we are investing in this business, increasing our OMP share in India over the next few years. This is a very attractive business where we have market leadership, and we are preparing to sustain that market leadership moving forward. But besides Celasto, we're also in performance materials. We recently had a big event at our Thane site in Navi Mumbai, where we're expanding our engineering plastics compounding extrusion line, which is actually increasing 80% the capacity of that line. So that was one highlight. And then in the middle, we're also reactivating a vessel, which will enable us to also produce more products in the system house, that we have at Thane. And connected to that, we upgraded and modernized our quality control lab at Thane in Navi Mumbai. And as some of you might know, Thane has been, let's say, the oldest site that we have in BASF. So it's a single OD site. It's a performance material site. We continue to invest in this site. As you remember, last year we also introduced a polyurethane application lab, which is also in Thane. We also continue to drive the green energy transformation. We just signed with CleanMax a hybrid solar and wind power captive agreement, which basically will take the energy consumption that we have at our two sites in Gujarat, which is Dahej and Panoli, to above 80%. And besides also, of course, having then the green attributes and contributing to our sustainability journey, it will also come at a very attractive cost. And this is a 25-year agreement, and we'll have significant savings here coming from this transition as well. We continue to intensify our engagement with key customers. Here, just two examples. In August, we had Honda Technology Day. As you might know, India is the largest two-wheeler market in the world, and Honda is actually the largest two-wheeler company, a manufacturing company in India. So we hosted a technology day demonstrating also the capabilities that we have with our performance materials segment to contribute to the two-wheeler industry, and especially when it comes to electrification. So the EV part of the EV transition of this two-wheeler market. On the right-hand side, we also had the battery show recently. A lot of interest, because electric two-wheelers, but also, of course, four-wheelers is a dynamically evolving market. And as you might know, we're active in the cathode active materials, which are an important element when it comes to the battery. So a very relevant market, and I think the two-wheeler market is destined to grow, and we see a lot of growth in that segment. Of course, we continue to connect with the industry and associations, being active, not only talking about sustainability, but also the development in the industry in many different forums. We continue to focus on D&I. I mean, this program, WeChemie program, has been a very, very successful program. More than 170 girls, bachelors of science of chemistry or masters of science of chemistry, have undergone this upskilling program, and most of these girls have been placed in the industry, either through internships or direct employment. So we're really trying to increase the inclusion element in the chemical industry. Same holds true for women in refinish, which is a segment of the market that usually the female participation has been much lower. And here we've gone to the second batch now. Around almost 50 women have been upskilled here and taken on by Mahindra, our partner. We continue to inspire young kids. Here you see a picture in Nashik. This has been the last kids lab that we hosted, engaging more than 2,300 kids from 18 schools. And this was the first time that we also had kids from tribal and rural areas. Before we were of course, in Mumbai, in Mangalore, in Bangalore, in Delhi. But now we went to a more remote place, also inspiring kids from rural and tribal areas. Then two very relevant updates. As you know, we're undergoing in our differentiated steering strategy. We are in the process of demerging agricultural solutions business. So the new company has been incorporated, BASF Agricultural Solutions India Limited. The board of BIL has given us all the approvals. There will be a 1-to-1 share entitlement ratio. Regulatory approvals with the Bombay Stock Exchange, National Stock Exchange is currently ongoing, and of course SEBI will also be involved here. The expected demerger completion timeline will be during the financial year 26-27, and BASF will eventually be also listed on the stock exchanges. So this will unlock shareholder value with a 1-to-1 ratio, and the demerger process is going. It's on track, and we're looking forward to implement this next year. A most recent update that you have seen on the 10th of October, also as part of our differentiated steering strategy, the BASF and Carlyle, a private equity firm, have reached a binding transaction agreement on the coatings business to create a leading standalone company. And what does this mean for India? First, as you know, as of 1st of January 2025, we have already incorporated the coatings business, the OEM coatings and the automotive refinish coatings business, into a separate legal entity as a 100% wholly owned subsidiary of BIL. As of March 31st, 2025, the said business generated sales of 479.6 crore, representing around 3.1% of the consolidated sales. Globally, BASF will reinvest in the coatings business, holding 40% equity stake in the new global coatings standalone company under Carlyle. So Carlyle will have 60%, and BASF will hold 40% minority equity stake in the global business. The global transaction is expected to be closed by second quarter of calendar year 2026, of course, subject to customary regulatory approvals. The evaluation and assessment of the effect on BASF India Coatings Private Limited is under process. Stock exchanges and stakeholders will be updated regarding the latest development in due course. So, to close, what is key for us moving forward? First and foremost, we have to continue to maintain the solid safety track record. Very happy to see that our volume momentum continues. Of course, the focus will be on the cost side, on the net working capital side, making sure our accounts receivables are under control, also the inventories. So a lot of focus has to be on operational efficiencies and continuing the volume momentum, utilizing our assets to the fullest extent. Of course, we'll continue to work very, very closely with our customers, with our suppliers, with all stakeholders in the industry, and continue to focus on our employees and fortifying our talent pipeline. With that, I would like to thank you in the name of the entire BASF India Limited board. And here you see the picture of our annual general meeting that we had recently. A big thank you to all of you for your continued trust and continued support. And with that, we close, and we are looking forward to your questions.
Yeah, thank you, Alex. I would request speakers who are online, if they want to raise their hand and ask any questions, then please do so. In the meantime, we will have our first speaker, Rohit Nagraj. Rohit, please. Yes.
Yes. Good afternoon, sir. And thanks for the opportunity. So first, I joined late, so I might have missed the initial remarks. So the first question is on the agricultural solutions business. In the last 4 years, we have seen that there have been 3 new novel product introductions which have happened. And I think that has helped us in terms of the revenue growth. But the momentum has certainly subsided last year, second quarter, and even during this year, despite the launch of Flexio in the month of May. So how are we? I mean, is there any slowdown which we are observing generally across the board, or is it specific to certain categories? Your views will be welcome. Thank you.
Yeah, Rohit, thank you for the question. So indeed, as you have said, I mean, the agricultural solutions business has done quite well if you look at multiple years. Yeah. The last season was a very difficult one. starting with soft commodity prices, yeah, especially in very intensive crops like chili. And chili, you know, there's a lot of applications that happen in this crop, and this chili acreage, but also the price has substantially reduced. Yeah, so that was one element to name an example. But also soybeans and cotton, for example, have had quite soft commodity prices. Yeah, so the appetite for farmers then to invest into crop protection is impacted if the commodity prices are lower. So that's one. Second, there was also quite some, given the monsoon and the excessive rains in some areas, which created flooding as well, which created less applications, of course, has led to some channel inventory, right, that had to be consumed, and that impacted certainly new sales into the channel. And those would be the two main categories that I would mention. Yeah, that has certainly impacted that business. But if you look at our numbers, I mean, it's still a quite resilient business, and the fact that we're continuously launching new innovative products, diversifying our portfolio, focusing not only on herbicides but also insecticides, fungicides, focusing on different crops. Not only row crops, but also specialty crops. We're making a concerted effort to tap into specialty crops more, into rice, as I mentioned, with the 2 launches that we just had this year. I think that will just make the portfolio much more robust and more resilient looking forward. And the team is very, very much focused on accounts receivables now, so making sure that we collect. And of course, there has been inventory buildup now for the next season. We believe that the Rabi season, which is coming, the reservoir levels are in a very good stage. Yeah, so there should be a good Rabi season coming. And I would say we're in a quite healthy place when it comes to inventories in the channel, at least for BASF, and also our accounts receivable situation. So I'm cautiously optimistic that the momentum that we have been having with our portfolio measures will yield also moving forward in this space. Yeah.
Sure. Thanks. That explains. One more thing in terms of the general environment across the chemical industries. We've seen that generally pricing environment has been benign. So what is your understanding that it's been benign for the last couple of years? Is there any uptick that we are seeing, and probably sometimes in 2026 we will see at least some gradual rise in general pricing environment? Thank you.
Yeah, thank you for that follow-up question, Rohit. Yes, indeed, and you see also in our performance materials results, as Naren had explained, especially the monomers business, that prices are under pressure in that segment, and I think the overcapacities that have been built in China are clearly visible in that, and to be honest, it's very. I mean, nobody has a crystal ball, but even going into 2026, I mean, it's the overcapacity situation in China, especially with a geopolitical tariff, unless there is something massive changing there, I think that will continue to be a difficult element on the upstream chemicals pricing situation in the industry in India. Yeah, I think it would not be fair to say that we see an immediate sort of hockey stick type improvement. Yeah, I think we have to be realistic here. Nonetheless, I think the volume momentum that we've been having, also with the continued investments, as I had mentioned also today in the performance materials segment in India, increasing our OMP share, and making sure that our assets are fully running, and that we focus also on cost measures. I think that will be key as we move forward in that segment. But the pricing pressure, especially in the upstream chemicals, we see it in our intermediates business. We see it now also in our materials segment business. I think that's a difficult element, and I don't see an immediate relief there, to be honest.
Sure, sir. Thanks a lot. If there are any questions, I'll come back in the queue. Thank you so much and all the best.
Thank you. Thank you, Rohit. I think there was one question in the chat, Alex, from Mr. Nikhil Gandhi from Bajaj Alliance, and he wants to know, I mean, of course, I think you've partly answered that question, but how is the outlook for the ag chem business globally? I'm not sure whether you can answer how is the global outlook, but maybe if you have any thoughts there, and also how do you see India as we move forward in the ag chem business, especially in terms of in volume, inventory, and pricing.
Yeah, of course. I mean, I can speak more about India closer to home. Globally, I mean, in principle, I mean, on very general, I mean, this will be a very general answer, yeah, in a way. But I think the agricultural solutions market overall will continue to grow. You know, we have limited arable land. We have a rising population that needs to be fed with commodities. So overall, I think the ag business per se is destined to continue to do well. Yield per hectare has to continue to increase, yeah, and that can only be done through technology, be it seed treatment, seed protection, but then also crop protection. So I think the outlook overall, irrespective of the geopolitical elements that can disrupt supply chains left and right on a short-term basis, I think the long-term outlook is a positive outlook. Of course, when it comes then into seed and crop protection, I think the seed market will probably continue to do quite well, yeah. But the seed market will have to be complemented with proper crop protection as well, yeah. So weed resistance, disease resistance will continue to be elements that will be visible, and for that you need constantly new innovations, new mixtures to come into the market, yeah, to complement strong hybrids and seeds. So I think it's a very general answer to your question, but I will leave it at that.
Okay. So anyone has any further questions or like to post your question in the chat? Yes, Rohit. Ravi Purohit, please. Yes, please go ahead. Can you unmute and then speak, please? In the meantime, we have another question, Alex, in the nutrition and care segment, which is that the segment has done quite well, but the EBIT margins are still weak there. How do you see the margins improving for this segment?
Yeah, I mean, as Naren had shown, and certainly Naren can complement here with maybe some of the numbers again, but both we've had volume and price increase in that category overall. I think, of course, what we see in the fast-moving consumer space, be it personal care, skin care, hair care, but then also in the flavors and fragrances business, yeah. That the recent GST support is certainly also contributing to that segment in a positive mode. That momentum should sustain itself, and we're happy to see that there is some pricing improvement here, which should also eventually translate into margin improvement. And the portfolio mix, I think that's something that the teams are really working hard on to improve the portfolio mix in that segment. So, shifting more towards UV filters, personal care, hair care products, and less to the oleochemical side, which is also a part of our business in care chemicals, which is probably more of a sort of tolling business, yeah, to the Unilevers of the world, which is lower margin, high volume, but lower margin type portfolio. So I think the product mix focus is one that team will focus on to uplift overall the margin levels in that segment. And certainly the current sentiment in the market and the support there that we see with the GST situation is giving us some tailwind, and we'll continue to carry that. I don't know if Nadine, if you want to add anything.
Yeah. So there are two business units in this segment: Care Chemicals and Nutrition and Health. Care Chemicals also has manufacturing facilities here. That's the one which is not doing so well. This at least in this 6 months, from 6 crore of profits, it has come down to 2 crores. Yep, that's the one which is not doing. However, what I was highlighting is the Nutrition and Health business, where the profits almost doubled from 14 crores to 27 crore. So net, as against 20 crores of last year, 6 months, it's 30 crores here this 6 months. So 50% increase in the profitability. And then the Nutrition and Health is the segment, is the business unit which I was talking about, which had both volume and price increase. So does that answer the question, Ravi?
I think he's not able to unmute for some reason.
Okay. So we saw some note there. He said something about BASF SC Analyst meet.
Yes. So there's a follow-up question also from him. In the recent analyst meet, BASF has reduced its overall capex intensity and is focusing on sweating assets and improving ROCE and free cash flow at the parent level. What are the similar KPIs for the Indian entity? And given that we have so many moving parts, it is impossible to guess which division will do well and when. So the question really is, do we have like similar KPIs for India? And, how do you see the next, let's say, from a business perspective, how do you see it?
Yeah, I think, of course, the KPIs that are driving our global decisions are also influencing and translated to us in India, right? So we have, we always say, cash is king in the current times, globally, but we also say it locally, So net working capital management is a key element in that respect. And I think India has always done exceptionally well to sweat the assets, and to do smart incremental investments once the asset utilization has gone to a very healthy level, above 80 to between 80 and 90%. And I think that India stands out compared to maybe some other assets in Western Europe, which are probably underutilized or less utilized. So from that perspective, I think first we have a strong volume growth momentum in the country, driven by the domestic consumption at 2/3 of GDP, a large population with a rising disposable income that will drive also the GDP moving forward, and the premiumization in all the different categories, be it automotive, be it fast-moving consumer goods. So we have a strong and growing and big market, to cater to. We have a very successful asset utilization track record, a very safe track record, which certainly then enables us to continue to support the Indian business and continue to invest where we have solid business cases, such as what we presented today in the Performance Materials segment, for example, with Celasto, with engineering plastics, just to name a few examples, or in the ag space as well, which also is a very profitable business. And innovation, of course, is an important element in that business to come up with new mixtures, new modes of actions in the different categories. So I think we have a strong track record, and I think also in the new global strategy, India is clearly in the focus, So to make a long story short, I think the KPIs, yes, it's true that globally, as some of you might know, we have a very, very big investment, the largest investment that BASF has ever made, that is coming on stream in China, 8.7 billion euro investment. It's coming on stream now in a low chemical cycle. So of course that investment has to be digested and has to be successful, and the utilization of that asset on a global level is an important next step for BASF. Then, you know, as also part of the global strategy is unlocking value out of with differentiated steering and allowing the ag business, but also the coating business to unlock value, which is happening as we speak, and is also transferable to India with the demerger of our ag division here. And then, of course, it proceeds from these unlocking of value of these businesses. I think on a global level, BASF is aiming to deleverage the balance sheet, so reduce the debt, and of course the interests that have to be serviced, yeah, and to also do share buybacks. I think that has also been announced that share buybacks are happening earlier than expected now. So those are the actions on a global level, and then CapEx. To your point, yes, there has been a clear signal that CapEx, given this large CapEx investment that we did in China, that CapEx will come below depreciation on a global level up until 2028. Yeah, so that's a bit the global picture. But I can tell you that focus on India will continue to be there, and wherever we see attractive business cases and investments, that will be something that will be considered in the company for sure, supported by our strategy, which puts India in the focus.
Thanks, Alex. I think the next question is on the industrial solution segment, and you've seen this business having margin improvements. How do you see this business as we move forward in terms of, you know, overall growth, and what are the EBIT margins that you would see for this business moving forward?
Okay, EBIT margins. I'd asked also here Nadine to maybe share with us what the current situation there is. But industrial solutions business, I think we have two businesses there in that segment. One is our dispersion business, and as construction in the country continues to develop, I think our dispersion business continues to do well also on the volume side. There is quite some price pressure and competitive environment also in that segment, and I'll ask Anil maybe to also complement here. But I think the dispersion business continues to grow, especially on the volume side, in line also with you know, the construction development in the country. And then we have the EV business as well, and there we're trying to performance chemicals business, which we call EV internally, where of course we have the fuel and lubricant solutions business, which with a growing automotive segment in the country will also continue to grow with that category. But there we're also looking at you remember that I think the last time at the last analyst conference we showed you that we're also investing in enhanced oil recovery, which is growing also quite well. So we're expanding sort of the portfolio of that performance chemical segment, which should enable us from a portfolio mix also to improve the business moving forward. But maybe over to you, Anil, to shed some additional light there.
No, I think well covered, Alex. For performance chemical, the fuel and lubricant solutions primarily largely depends also on automotive. And there we see that also with the GST cut and in general with also new capacities being announced, it in good shape. And we see that will continue to grow in that segment. The other business in performance chemical is plastic additives, mainly the antioxidants and UV stabilizers for plastics. And there we see that with overcapacities globally and also a lot of push from China, we see that the pricing is under pressure. And there we see that this pricing pressure will continue in this segment for long. The third business in performance chemical is catalyst, the process catalyst part, and there with let's say announcements of new petrochemical projects, there we see that there is a good kind of pipeline of orders coming as the projects are getting announced. Only caveat is that sometimes the projects also get delayed, which also means that we have delayed delivery of the closure of the orders there. For the dispersant business, largely depending on paint, and for the first time the last 10 years we saw that paint industry per se was even degrowing or flat. So also with the incoming of players like Opus, we saw kind of a lot of inventory built up in the channels, which is getting normalized now, and now at least we see that there is some positive offtake in terms of growth for the paint industry, and then with that maybe for the dispersant business, now we see the last 2-3 months has been stronger compared to the starting of the year, which we started on a weaker front there. Yeah. So that's all from my side from industry.
Yeah, and both have local production. So I also agree there is scope for more than 5% EBIT margin. Currently, it's 5% EBIT margin. Yeah. So definitely we should be earning more than 5% on own production. So yeah.
Then we have another question from Ravi Purohit on the royalty front, and this is for March 2025, as published in the annual report, where we've seen in royalty rates going up, right? And but largely you see also the sales being kind of flattish. So the question is, what has changed, and is this one-off some kind of or whether the royalties have been raised?
So royalties are on specific products at a specific percentage. So we have a range from 1.5% to 13% kind of range on different products, different kind of royalty rates. And depending on the product mix, the royalty amounts may be higher or lower, irrespective of what the top line is. Because the top line may stay the same, but if the product mix changes and if the applicable royalty rate is different, there will be slightly higher royalty. But these are based on agreements with the patent holder of the product.
Right. Nikhil Gandhi has also asked a question on, let's say, looking at the parent strategy of deleveraging, what you highlighted also, Alex. Are we anticipating anything in India on a similar lines? Especially, let's say, for example, any promoter stake sale or something like that. Is this also planned for India?
So, I mean, first of all, from a deleveraging standpoint, I think we are have always done quite well. We are sort of have always been debt free, and Naren always makes sure that we don't carry too much debt. I think that's different on the parent company globally. Yeah, so that's why there is an active strategy now to reduce the debt level there. I think here we are very healthy on a local level. And again, we don't make forward-looking statements. Yeah, I think we continuously evaluate options on how to improve our business and how to continue to invest into the business in India. But at this point in time, I would not make any forward-looking statements in this area.
Thanks, Alex. Another question that is coming in from Ranjit is, can you guide us on the capex amount for our upcoming Celestro expansion, and what could be the peak sales? And also, if you can help us with the capacity that is coming in. I think definitely capacity we cannot directly answer, but maybe, how do you see I think you've highlighted this topic, but maybe you want to put in furthermore on how do you see this business moving forward from a Celestro use perspective?
Yeah, the exact capex numbers of what has been invested so far, I think I'll hand over to Naren there if he has that number for Celestro. So we're doing an upgradation of the Celestro asset, that we have in Dahej, and it will come also with a capacity improvement. overall, I think we're talking about a sort of 11 million Cellasto, as far as I recall, units, which is a very substantial amount, and we're market leader in this space, So, and that building, as you saw, it's a quite big building, and it will give us a lot of space also to continue to increase in the future, our footprint, and increase our own manufacturing product share in India. Because right now, I mean, that business is growing. It's of course correlating to the automotive growth, not only four-wheeler, but also two-wheeler a segment, which is one of the segments where we see a lot of growth potential as well for Cellasto, because that's primarily rubber, and also three-wheeler, that's primarily rubber business. So we're trying to shift rubber to Cellasto. And that's and I think that will happen. And right now we're still having to import Cellasto volumes even from Germany, and that's what we're trying to reduce with these type of investments. Maybe, Anil, I don't know if you have anything to add there.
No, clearly. So also this investment not only will bring additional capacities, but also this will help to modernize the lines and also make it will have more automation, which also will then overall improve the efficiency and in terms, let's say, our profitability. And so, as Alex mentioned, currently we import a lot of these parts from Germany. And in future, once the capacities are ready, we can then localize them, also adding on a little bit to our bottom line.
Good. Are there any further questions from anyone? If anyone wants to speak, please raise their hand. Or if there are any further questions that you want to ask, then you can also put it in the chat.
Ravi has one.
Yes, you can unmute and speak, Ravi, if it's still possible.
If not, Ravi, you can also post your question.
He's doing that. Yeah, he's doing it.
There's an issue in the slide. Not able to speak.
Yeah, I think he's posted the question. Once the ag solution is separated, the overall margins for the residual business will be even lower. What is our view on them on a slightly mid-term level?
Yeah, I mean, our
residual business
strategy, as also highlighted globally, and it's in the public domain, is to strengthen what we call the core, right? So the core, by the core we mean those segments that from a chemical value chain are integrated, are connected, and the global strategy is to continuously enhance the core, So we are constantly evaluating options to expand our product mix to strengthen our core businesses in that segment. I think that will be an ongoing activity that actually Anil is leading, looking at new project opportunities, be it organic, be it inorganic, to strengthen the core. And I think that's something that is happening as we speak, and will continue to happen as we move forward, to strengthen that business as we continue.
And to add from a functional perspective, we are also carefully looking at the cost structure to ensure that the cost structure comes down commensurate with the core business. Because today there is agro, which is also absorbing part of the cost from the functional platforms. Going forward, if that is not there, then the core chemicals should not be burdened with extra costs. So we are ensuring that that cost structure is also kind of adequately addressed.
Yes, good point.
Good. Any further questions from anyone online or in the chat? Okay.
Okay. No
So
more
then,
questions?
I think, thank you, Alex, Naren, and Anil, and thank you everyone who has participated online. And I wish you all a safe day and take care.
Yeah. Thank you very much,
Thank you.
everybody.
Thank you.
Bye. Bye.